Welcome to GSTZen educational series on the new GST returns. The GST Council approved the new returns and filing procedure in July 2018. The government portal has released a prototype of the offline tool as well as enabled filing of new returns on trial basis. At GSTZen, we have written detailed articles to help everyone understand various aspects of the new returns. This video provides you with a high-level overview of the new returns. The new returns consists of two parts. First is the reporting of sales and purchase invoices, and second is the actual payment of taxes and discharging of any liability. Large taxpayers, those with annual aggregate turnover more than rupees 5 crore, shall report invoices every month in the form RET1, while the rest shall report once every quarter in one of the forms RET1 normal, RET2 Sahaj or RET3 Sugam. Tax is to be paid every month for all categories of taxpayers. The monthly return filers will pay tax amount at the time of filing RET1 every month. The quarterly return filers will file a different form PMT08 in the first 2 months alone, and for the third month they will pay tax at the time of filing the main return. For the first 2 months, you can think of this as an advance tax payment where you calculate on your own and make the payment. The taxpayers shall report invoice level details either monthly or quarterly, and as mentioned earlier, there are different return forms for different types of taxpayers. Let's see which form a taxpayer should use. A large taxpayer with aggregate turnover over 5 crores shall compulsorily file RET1 every month. Those with turnover less than 5 crores, they have 3 options. That is RET1, which is normal, RET1 Sahaj, and or RET3 Sugam. These are quarterly returns. And which form to use? Let's look at it in a little bit more detail. If the taxpayer has exports or sells through e-commerce or wants to claim ITC before the suppliers have uploaded invoices, they must file RET1 normal return. And taxpayers with only B2C sales can file RET2 Sahaj. And those with B2B sales can file RET3 Sugam. This flowchart explains this in detail, so please take a look. Now, let's see how the return filing process works. The main return RET1 consists of Annexure 1 of outward supplies and liability and Annexure 2 of input tax credit and the main return form. Let's first look at Annexure 1. Annexure 1 is similar to the old return GSTR1. It mainly reports outward supplies, that is sales. In addition, Annexure 1 also includes inward supply that causes liability, for example, per import of goods, import of services, or any purchase made under reverse charge. The taxpayer can file or upload these invoices continuously on a day-to-day basis, and these invoices will appear in the Annexure 2 of the recipient. As an example, invoices uploaded in the Jan 2020 Annexure 1 before the 10th of February will appear in the Jan 2020 Annexure 2 of the recipient. Invoices uploaded after 10th of February will appear in the February 2020 Annexure of the recipient. So now let's look at Annexure 2. The Annexure 2 reports purchases and the input tax credit. Annexure 2 is similar to the old return GSTR2. The government portal auto-populates Annexure 2 similar to the GSTR2A. The recipient can view all these invoices and then avail ITC against invoices that the supplier has uploaded. To avail ITC, the recipient will accept those invoices, or there is also a deemed accept option. If no action is taken, it's considered as accept. The recipient can also reject wrongly uploaded invoices. The government portal takes invoices reported in Annexure 1 to calculate Table 3 of RET1. The portal also fills some parts of Table 4. The taxpayer can fill in other details such as nil and exempt sales, advances received, advances adjusted, and so on. The return one also has tables for TDS, TCS, interest and late fees, details about the payment of tax, and details of the refund of tax. Let's look at the main difference between the old and the new returns. The single big difference is that the need for reconciling various parts of the returns has now gone away. In the new returns, tax is automatically calculated on the reported invoices. So difference between GSTR1 and 3B, those types of situations will not happen. Similarly, recipient can claim ITC only on the supplier's invoices. So therefore, there is no more issue of difference between 2A and 3B. So taxpayers can relax, they will not receive these types of notices going forward in the future. That's an overview of the new return forms. Thank you.